into the discussion. Thank you so much for being with us today. We're going to kick off with, I suppose, Joe's T-shirt to an extent, which says "Defy the system," I believe.
Yeah, only 2% of the system.
So crypto is 16 years old, which means it can drink, it can go out and stay out late, and it probably is that kind of annoying teenage habit of thinking that they can do everything better than the oldie fuddy-duddies. So there is a lot of similarity, I think, between a teenager and perhaps the crypto industry at this point, because there is a saying that says, be careful what you wish for, right? Teenagers want to be grown-ups. Crypto for years has been saying that we need institutions, the institutions are coming. Now that they're here, it feels like there's a bit of worry, maybe doubt, fear, uncertainty, and doubt about what actually this means, not just for crypto, but also for the institutions. So let's kick off with that. Is this a situation of be careful what you wish for becoming real? Is it a threat that institutions are here and we need to defy the system? Joe?
So I can take that from the decentralized perspective. I would argue that we were very young adolescents in 2017 with the ICO phenomenon, and we became slightly more mature adolescents, teenagers, when DeFi kicked off in 2020, 2021, NFTs got some traction. But basically we were pretty much unsupervised teenagers. And so not only were we unsupervised teenagers, but the principal was giving us bad instructions or no instructions. And so that led to some odd behavior. And now I think we're young adults. I think we are maturing and we're ready to take our position in polite and productive society. And there are many things going on that you could describe as traditional finance or enterprises making use of decentralized protocols, not necessarily very decentralized, and actual traditional finance onboarding itself to decentralized finance or to rigorously and not so rigorously decentralized protocols. So those include stablecoins, a massive phenomenon that's going to change the nature of money and payments in the world. It's going to change maybe the political architecture, geopolitical architecture of the world. Digital asset treasury companies, most of those are a big mess. Some of those are really profound and valuable constructs. I'm involved with one of them called SharpLink. And TradFi is moving on to DeFi, whether it's tokenized funds or companies actually soon starting to make use of decentralized finance. We maybe need a little more clarity on legislation in the United States and other parts of the world in order to make it really comfortable to make use of decentralized finance protocols, especially lending, borrowing. But once that gets going, it's going to be gangbusters. We're living in a world of debasing currencies, and so you can choose to hold assets in a depreciating currency, lend, potentially borrow in that currency, or you can potentially lend in an appreciating currency, potentially Ether, potentially Bitcoin. The value of those currencies have been going up roughly exponentially for over a decade. Those ecosystems are growing exponentially, and a lot of organizations, a lot of individual investors are going to choose to hold their capital in those appreciating assets and to put that capital to work.
Do you think, sorry, before we move on to you, Carolyn, do you think that this growth will continue? And is the kind of decentralization dream, I guess, over with these big boys coming in from Wall Street?
Those to me? So yeah, it's just getting started. So I may be the most decentralization maximalist at this conference. This is there are a lot of crypto conferences, and this is a very TradFi crypto conference. Apologies, but essentially, the world is a mess in so many different ways. There's so many risks and challenges and opportunities associated with those risks and challenges. And the world has been operating top-down command and control for a long time, for millennia. That's because we need to marshal lots of people, lots of resources, lots of other intelligences in order to build important things, build big things. We need collective, cooperative projects, and those things require trust. And the nature of trust on this planet has been top-down command and control, and it is fracturing right now. It's pretty shattered as we approach the end of a super cycle that started at the end of World War II. And so we're moving into a new super cycle. We need a new form of trust. That form of trust was invented by Satoshi Nakamoto, 2008, 2009. Satoshi showed us how to operationalize that form of trust in the form of Bitcoin. Vitalik Buterin came along and showed us how to take that idea and instead of just applying it to a certain kind of money, we could apply it to every system that we build in our economy. And so that's where we are. That's why decentralized trust, rigorously decentralized trust is important, but also sufficiently decentralized trust is incredibly valuable. And so we'll see a world of big consortia with sufficient decentralized trust and corporate chains that need to put smart contract-based platforms that are more transparent and they speak token, they're connected to other blockchain systems. So we're going to have different grades and different layers of trust.
Thank you. Carolyn, what's your kind of point of view on this kind of intermingling of these two spaces, and how does it feel to be sitting in BNY, which is one of the most established, one of the oldest kind of Wall Street players, maybe we could say most conservative as well to a degree, to be experimenting with this space, which is is kind of slightly young person who is a bit unpredictable, maybe a little bit sort of dangerous, and very decentralized.
So I would say we are highly supervised, not necessarily teenagers. We're 240 years old.
No, I mean the crypto industry.
No, I get it.
Yeah.
He's talking about us.
Yeah.
Well, he mentioned that they were teenagers unsupervised in some time period. I would say we are highly supervised, and we're 240 plus years old as an institution. So there is this contrast that you just set forth. At the same time, as the market infrastructure from the history and the future market infrastructure, we believe we need to come together. And BNY is highly committed. It's not experimental. It's committed to continuing to evolve the financial infrastructure for our clients and the world. And one of the amazing things about BNY is that we are a large-scale institutional player and, again, highly regulated. And when you can leverage all of the amazing elements from a technological perspective of the digital market infrastructure, blockchain and distributed ledger, with the traditional, all of a sudden, it's frankly quite magical. So when we think about all of the ways that securities settle, DVP, and all of the amazing ways that cash gets moved around the world, doing that in an always-on way is pretty remarkable. So for those of us who've been in markets for quite a long time, we see the magic of distributed and blockchain and how that can transform in a really amazing way.
By magic, you mean profit opportunity, right?
So I mean that we're always on a quest to improve market infrastructure. And for us, we want to enable our clients to grow. And when you can actually embed better technologies or newer technologies to work in concert with great existing at-scale technologies, that's better for everyone. Yeah. So we believe in growing the markets, improving markets, and with that, everyone grows. And our job is to enable, again, better markets, better systems for our clients. And when we think about all of the things that we do as a network of BNY for the financial markets, doing that in concert with blockchain and the greatest technologies that exist, we have to do that for our clients. So I think, is there elements of profit? Sure. At the same time, like, it's not necessarily, all for, when you grow markets, you enable the world to prosper. And that's what we're looking to do, and grow an ecosystem. So I think that's critical. From the perspective of big trends that we're seeing, and I think you mentioned regulatory, that's really important to have regulatory clarity for traditional and digital. Second, I think that the mainstreaming for all of us from a traditional perspective, that is mainstream now, digital assets, as well as from an investment perspective talked about, but also again, like the infrastructure piece. Similarly, we think about Joe mentioned cash, like the rise of digital cash is a critical component to that. So we see that, and then lastly, interoperability. So the role we play is to leverage all of those pieces, like obviously regulatory, digital cash, and financial infrastructure. But then we play the role of interoperability with the traditional systems. We touch 20% of securities trading every day. We're the issuer of U.S. government treasuries. We are like about 60 trillion in custody, and we have a $2.2 trillion asset manager, along with many other things that we do. So for us, enabling and embedding that in an interoperable way for our clients to grow is what we're trying to do.
Thank you so much. And David, can we come to you, please? And you're sitting kind of in the middle, right? So you are almost the platform where some of this is playing out. Can you give us a few examples of actual examples of practices maybe, or products that people are wanting and asking for, that demonstrates this intermingling of these two worlds?
Yeah, well, this is definitely the case. I think our hearts are with the teenagers. Nothing's more fun than being a teenager, right? And but nonetheless, yes, we had to kind of, I guess, part of the company had to advance beyond being teenagers pretty early on. I mean, we've built a TradFi company and a crypto company in one to basically bridge between the two. And so on the TradFi side, all the regulatory stuff, how much time have I spent in DC, God knows, like all these various types of things. And on the crypto side, we're deep in the tech, deep in the newest innovations out there and all these various different types of things. I mean, to your point on, is it, a good thing or bad thing for the, institutions coming in, it's definitively a good thing. I mean, I think there's definitely plenty in crypto that might be scared or might think it's not a good thing or might be, concerned about it. But, I mean, there's a couple of pieces there. One is the premise of decentralized technology is such that not any one group or individual can actually, change the will of the participants in the network. And if an individual does or a group does, they can go and create their own chain to go and do it. But there is one of the beautiful things about the ability of this new technology to kind of create new chains and so forth, allows different groups to participate as such. I think the evolution is this, though. I mean, I think all of the, for what it's worth, and we're talking with almost every, kind of broker, bank, across the globe. And in 26, there's going to be many of them that launch, access to crypto. Much the same, crypto native companies are, many of them, at least those like Kraken, because again, we've already built the TradFi and the crypto company. We are now moving into, frankly, just like plain old TradFi, right? We offer equities, we offer derivatives on commodities and so forth. But probably the most interesting thing is crypto tech now running the TradFi assets. So it's not just, Schwab offering the ability to buy and sell Bitcoin. It's now crypto tech running TradFi. This is stablecoin's first most significant example. We got an implementation for public equities that we think is super exciting, X stocks. And this comes around to like your question on different use cases that I think is like really amazing. And so the reality is we couldn't actually move to that step right away back 10 years ago. It just didn't work. We had no infrastructure out there. In order to get adoption, it's difficult to like kind of take that as the first step, because the reality is the crypto rails, they're only going to improve TradFi kind of like efficiency and operation and so forth by an incremental amount. call it 5%, call it 50%. But in like startup land, that's actually typically not enough to get someone to like use your brand new innovation thing. You kind of got to be 10x better in a lot of ways, given all the change and so forth. And for some people, crypto was 10x better, right? If you were someone who had a massively depreciating currency, if you were someone who suffered from censorship resistance, like all of these, like the early premises of crypto. But what that did is it allowed us to kickstart this network. And we see this in our customer base. You had all these people that wanted to hold stable coins, inflation hedge, wanted to hold Bitcoin inflation hedge, businesses, individuals. Then all of a sudden there were hundreds of thousands of them across the world, and they're like, hey, this is actually the best way for us to make payments. Like if we're faced with the need to make a payment as a company that's already integrated with crypto, we can do it via fiat. We get all that integration with big banks and so forth. We do with crypto. We've already built all that out. We always send it via crypto. It's like, why would you ever send it with the slow way? That's probably, that has, when you're sending it internationally, probably about a 7 or 8% probability that it's going to get, munged up and caught up and held or whatever it is. The cost, the speed, and so there's no question. And so, but once you get that infrastructure in there and implanted all the institutions, it's going to be a no-brainer.
So yeah, go.
So until maybe a little over a year ago, our ecosystems were very separate. Decentralized protocol ecosystem, crypto, was supposed to stick to its knitting over here, and TradFi wasn't supposed to talk to those radicals. And there were really positive examples of crossing the streams a little bit, but it was thought to be dangerous and uncouth to cross the streams. What happened was Trump administration got into power. The SEC changed its administration. Stablecoins were already capturing the excitement of the world. We got the Genius Act, and suddenly all the banks were panicking, especially the smaller banks, and the CSDs and the major stock exchanges and major financial companies all realized that, hey, we're moving rapidly into a very different world, and we got to understand this, and we've got to respond. At Cybos, CEO Javier announced that Consensys, using our Linea Layer 2 technology, was helping Swift build the Swift ledger. And that's going to be a multi-phase project. We're building a prototype. But the tone at that event totally shifted. Everybody started talking about TradFi on DeFi and getting permission to now talk to one another. So who doesn't like this idea of the traditional economy and the decentralized economy coming together? I think it's a political philosophy issue. If you're a socialist, if you're a big government Democrat in the US, and government can't be big enough for your liking, if you want to control granularly most aspects of human life, then decentralized protocols and disintermediation is an enemy. That's what we saw under the Biden administration. If you're more of a free market capitalist, going all the way over to libertarian, et cetera, then you appreciate the freedom, the agency, the self-sufficiency that you can achieve. And so I think we're going to be struggling between those two political poles for quite a long time. But bottom line, the decentralized protocol technology is very powerful. It will make everything better. It will enable economies to grow bigger and faster.
So we're a company full of libertarians, and it's right there in our culture doc on the website.
Yes, it is.
And so I'm with you on this piece around, big government, command and control, and so forth. Like, hey, decentralized, we can't control it. That's a problem. What do you think? What do you think is going on? And so maybe this is China. Maybe I don't claim to know that, but they've been very anti-crypto, right? I mean, at least outwardly.
Unless they need to get their money out of the
at least right. Well, individuals, of course, for capital flight. Yeah, we definitely have plenty of
Hong Kong
users
has-
there.
Hong Kong
plenty
has
of
purpose.
users there. But what do you make? And I'm with you on the whole Democrat piece that leans towards big government and so forth. But what do you think about this place that we're in now, Europe, which leans more socialist? But have they been? They haven't necessarily been more negative on crypto, which is a little bit puzzling, isn't it? Because I'm with you on the construct there.
Yeah. I think Europe has, maybe not Switzerland, but Europe has a lot bigger issues than their relationship to crypto. They're very good at regulation. They're less good at innovation. And so I think that's what Europe is struggling with. I think Europe will go along with the rest of the world.
I'm sorry to interrupt. I was just thinking,
And
that
Switzerland has been very proactive.
Yeah.
A lot of activity.
Yeah.
Regulatory-wise, there's stuff that came out recently. It's around exchanges, the structure of exchanges, and taxation. They're a little slow on that, and a few other elements.
Switzerland is quite pragmatic traditionally, right? So, I mean, beyond the ideology, and which is of course very important, but this kind of crossing the streams that you mentioned, Joe, that does change the competitive landscape, right? It changes the landscape for the crypto native industry and also for the TradFi guys, right? I mean, how do you see this landscape change, and what do you think? Where are the areas where it impacts? Do you think? Because David mentioned payments. You guys do a hell of a lot of payments.
So when you think, so BNY is amazing at storage. As I mentioned, it's about like 60 trillion of assets we have in custody, but it's more than that. And when we think about what is the power of tokenization and distributed ledger, in fairness, it mobilizes so many assets, our assets or others. And what does that do when we think about that interoperability and that connectivity? All of a sudden, if you imagine a world where assets can be mobilized either in the safe, regulated way or in a safe, more distributed and DeFi way, there's different paradigms, but they both actually need to work together in fairness. We obviously are regulated. We have to follow those rules. And there's a lot of other institutions that also want to be part of a regulated environment. And that's what we bring. At the same time, that tokenization of mobility, that's enabled so many other spots as well. So I do think that you can have two paradigms that then come together in many ways. That's super important. So for us, where do we start is almost like your question. When we think about, again, it's like custody is really important. It starts like, where are the assets, either traditional or digital? And then how does that transform the future of trading? So when we think about what are the traditional finance mechanisms for payments and settlement, that will transform. That is transforming and enabling tokenization, and digital assets broadly will enable that. Plus AI. To be clear, like having a programmable mechanism, is the cash there, is the security there, or will it be there? And DVP, that is like a huge step forward that we see is going to happen. So enabling better, faster, cheaper settlements, really important for the entire world, related to digital as well as traditional. But what do you need for that? You need payment layers. So obviously, as you mentioned, we do like trillions of dollars of payments every day. But adding digital to that menu of ways that you can move money around the world is critical. And it is that step for driving adoption, because we do have FedWire, there's SWIFT, there's real-time payments, and there's a whole host of ways everyone uses different payment systems. Tomorrow, it's not going to shift off. It's just that you start to add additional things. We just announced our tokenized deposit, another mechanism by which one can make payments. But it's a menu of opportunity. And stablecoin, tokenized treasuries, tokenized cash, all of that is part of that menu. And over time, the best wins. So it's critical to have that menu, if you will.
And how do you? Yeah, sorry.
I would argue that the shifting competitive landscape in the financial industry is a problem for some people, but some people just might call it innovation. And if we see it as a problem, it's not that big a problem.
No, but I mean, even for the crypto native guys, right?
There's geopolitical fracturing. There's way too much debt in the system, especially in governments. Maybe the disparity of power, control, and wealth in the world is the biggest problem facing society right now. It's getting worse and worse, and we're gonna have revolts. We are having revolts in different places. There's There's a lot of people in the world that don't feel like they have agency, whether it's economic or social or political. And so I think the finance industry and the AI industry and big tech in general needs to recognize that and needs to come up with some solutions. Decentralized protocols, giving people control over their identities, over their personal data, over their access to AI, over their politics and money. I think that's huge. I think with AI, people are going to be empowered, and that's the problem that decentralized protocols uniquely, I think, can solve.
I was thinking more, so Carolyn, you mentioned custody, for example. There are a lot of crypto-native custody providers, who will think, oof, this is a new ball game, right? So there's like a lot of, it's not just so much, on the TradFi side, but I think for the crypto industry as well. Or if we come to you, David, an exchange's point of view, do you view yourself as competing with, the New York Stock Exchange now?
Yeah, we do. I mean, I think it's like financial services is interesting. One of the things that, frankly, I've learned over the maybe past like half decade or so is how ancestral this industry is. It's kind of crazy. Like almost every financial services company, both like competes with so many other players, yet they're also their customers as well and their partners as well. It's kind of interesting. Like Goldman and Morgan Stanley are big competitors, but they trade with each other every day, thousands of trades and so forth. So there's a big dynamic of that I think is like will just simply continue. And then you kind of have your crypto native companies who'll get thrown in the mix, and from our standpoint, Kraken, we have certainly adopted that approach, which is, we're going to partner with traditional financial services companies, but then we'll have products where we're looking to offer them to similar types of customer segments, and they're going to be competing. So I think for what it's worth, clearly biased here, but I do think there is a aspect as we look at the convergence in a lot of these for kind of like the broad set of the market where there's we're in a special place to be able to understand both of them, because we kind of like, for what it's worth, I talked to a lot of, we certainly talked to a lot of people in TradFi that really just don't get DeFi at all and crypto or any of these various different types of things. And then the same is of course true for, crypto and DeFi, where, in the early days, there were certainly a ton of people in crypto would be like, over my dead body, will there be any type of regulation that touches my, crypto or Bitcoin or what have you, which obviously is maybe not quite so, pragmatic. So,
I don't see, I think the competitive thing is super interesting. I don't see BNY competing at all in this space. I see us partnering and enabling an open, basically digital assets and all of the elements of the infrastructure enable us to open our network and drive scale and enable our clients to be at scale and enable the system to be at scale. So for us, it's about growing an ecosystem, and certainly and one little thing one can say we're competing, but actually together we could build a whole system. Yeah. So I don't see us competing at all.
To your point, it's a very positive sum environment that we're moving into.
Yeah.
And that we're accelerating, and if we all collaborate and create protocols that enable velocity to increase, we're just going to create so much more value.
Yeah, I think if someone thinks they're competing with us, they should come talk to us, and we'll figure out how to grow together, because this is an entire ecosystem that we're just at the beginning. And I do think 2026 is the year of institutional adoption, which means scale. It does mean evolution of blockchain. There's a lot of things that we need in traditional to be truly at scale in the trillions, et cetera. And we can enable that, but we need our partners to do it. So we are not competitors. We are very much enabling the ecosystem, just as we do today in financial markets.
Thank you so much. And we do thank you guys for sending in so many questions. We will get to them in just a second. But let's go quickly down the line. Should DeFi be exempt from securities regulation? Yes or no?
Oh.
Such a broad group, DeFi, but generally yes. For many types of protocols, DeFi transactions, and so forth. I mean, obviously there are some that'll.
Yeah, sufficiently decentralized protocols according to a well thought through definition of decentralized should not be regulated by centralized authorities, otherwise they won't be decentralized protocols anymore.
Thank you. Carolyn?
Some interfaces to those protocols could be centralized and regulated.
Okay.
I think things that are already regulated should continue to be so, even on a decentralized format. I don't think there should be loopholes to which one can manage these regulated areas.
Now we have a market. Yes and no.
The question is how, if you build a decentralized lending borrowing platform that is immutable, that doesn't have anybody controlling it any further, that's virtually impossible to regulate.
There are challenges.
There are challenges. Exactly.
There are challenges for sure.
Thank you. Let's get to the audience questions. We have a question from an anonymous curious person. Can a decentralized network truly survive if its validation layer is forced to choose between protocol level neutrality and local legal compliance?
I can take that.
I think I think that'd be best, yes.
Yeah, so I don't think it's going to be a problem for my favorite decentralized protocol. I think it's critically important for the world to have a national, rigorously decentralized protocols so that all the different actors in the world, maybe they're nation states that are at war or in some conflict with one another, but they have elements of supply chains in common. Maybe they resolve their issues and there's a treaty put together with a smart contract with billions of dollars in stake guaranteeing their performance against that treaty. So I think the world is in critical need for such a rigorously decentralized infrastructure or set of tools. Things should be regulated if they are obviously situated in a certain jurisdiction and if they're centralized in themselves, if they're the kind of organization or the kind of construct that needs to be regulated.
I think you can be a country out there and you can decide to say, hey, I'm going to regulate at the protocol level. And it's a big place out there. And so what'll happen is whatever protocols decide to adhere to those regulations, which will be some but few, no one will fucking use them. And everyone will stay on Ethereum, which is, the main chain of Ethereum, which doesn't adhere to XYZ's country's regulation at the protocol level, because there will always be a Bitcoin and there will always be an Ethereum chain that doesn't adhere to any one country's protocol regulations. And I guarantee you, I know which chain is going to win and have the most adoption and the most usage. So,
yeah. So there have been issues around Ethereum in terms of validators and block builders, and are you a validator or builder that will sanction a sanctioned or will accept a sanctioned transaction or a sanctioned address sanctioned by the U.S. government? And these different pools popped up. Some would be totally permissive, and some would be more careful to comply to regulations. And so there will be choice because there will be different kinds of validators and block builders around the world. This nation, for instance, has laws around its data or certain kinds of data moving outside of the borders. And so a layer 2 modular blockchain network or a set of layer 2s and layer 3s for different cantons perhaps might be an appropriate architecture for Switzerland to adopt, and it can be connected to layer 1, and as a layer 2 or a set of layer 2s, you get the full security guarantee of the rigorously decentralized network, assuming you build your layer 2 properly. So there are good solutions for a complicated world.
Thank you. We've got 2 minutes, so I've got one question each to David and Carolyn. If you could just, be nice and concise, and then we'll have to finish on time because we are in Switzerland. David, Kraken, how does libertarian crypto OG beliefs clash with going public? Will being public stifle or slow innovation?
It's kind of a boring answer to this one for what it's worth, because I mean, we literally have over 100 regulatory licenses. So we've been down this road of what does it mean to engage with governments? What is it? Should we actually do something in the US called lobbying? I mean, God, this is terrible. We're really going to do this. And so we've kind of like gone through all of these different things, pieces on how we have to, progress through audits and regulation and so forth. So at this point for Kraken, that one extra step of, being a public company, we're already kind of down the path of so many of these different things. I think we're not going to see a big change for us.
Wonderful.
I would argue that it decentralizes your ownership further, and it forces you to comply with more rigorous expectations.
So you don't see a conflict so much? You think it's actually an
I think it can be very valuable, yeah.
Wonderful, thank you. And Carolyn...
That's for a company, not a decentralized protocol, obviously.
Will institutions using digital assets actually benefit legacy blockchains like Ethereum, do you think?
Absolutely. Yeah, I think like the future of financial markets is about decentralized, and it's about the blockchain, and as an efficient mechanism for storage, record keeping, and so on and so forth. Again, it needs to evolve for the trillions that are like actually institutional. So for the scale, the trust, and the systems that we build today and use today, it will evolve. But just as our systems are evolving, so will the entire digital asset space. So I think the key is to build together and to transform markets together, and that's where we see the world going, particularly for 26.
Thank you. Once more going down the line, one sentence, please. Biggest theme for 2026, David?
I guess we hit it. TradFi's coming.
Joe?
Explosive growth in the decentralized protocol ecosystem and the convergence of TradFi and DeFi into finance.
And Carolyn?
I think interoperability between markets, between traditional and digital, and the entire infrastructure of traditional and digital.
Well, please join me in thanking my wonderful panelists, and we've almost finished on time.